see, we are out and about porting this at the little park near my house. Today's daily financial news is going to be a little different than the last 3 or 4 years for two reasons. First and foremost, this is actually the only video that I will be doing today. You will see an amazing video that I truly hope is life-changing at 9 o'clock. That is Spencer and Todd talking about house hacking. It is something that I truly believe really works when you're young. And as you will see in the video, I really want to push the idea that empty nesters might want to think about house hacking as they get older. It is something that I want to push. It doesn't have to be only for 20 or 22-year-olds. So again, this is the only video I'm recording today. There's a 9 a.m. video with Spencer and Todd. And then, yes, I got with Dan Bird to talk about stocks, the stock market, and all of that stuff. So, those videos will come out as well. So why is this video the only video I'm recording today? Well, it is my 50th birthday today. Yes, July 17th, 1972. I was welcomed to this world. And this is a day that I always told myself I'd retire. Right? If you've heard my story over the years, I always said 50, 50, 50. Well, yeah, today's the day. As you know, I retired at 45 instead, but I don't know, this one's hitting a little different. So I've done everything I can to kind of just do this video, right? Keep the 1,000 days in a row going. But I didn't want to do anything else. So just gonna chill out, see what's what today. So thank you for all the birthday wishes. I see them all. I appreciate it. But let's get into the daily financial news. So a couple of things that I'm looking at here. First and foremost, mortgage rates have started to tick up. We saw that mortgage rates got better for about 2 weeks. They now have started going up. I think it's fair to assume that they will continue to go up from here, certainly for the rest of the year. At what point do they come down, right? Come down in a meaningful way? I think the answer is when the Fed pivots, when the Fed pauses, when we really stare the face of a recession. The other thing I want to remind you, we put that 52-year spreadsheet together, 2 years ago now? And as I've always said, I've always asked you to look at the spreadsheet and simply ask yourself, who won the 1970s? The 1970s really are the worst decade of the last 50 years. Stagflation, inflation, all of that. And I think it's very clear. If you haven't looked at the 52-year spreadsheet, good news, it's so valuable, we give it away for free. It is in my free Teachable course. Just scroll down. It's in the bonus section. I want to thank John Sterling for going the extra mile and adding data as it's updated. But I think a lot of answers are in that spreadsheet. So again, do yourself a favor. If you haven't seen it yet, go get it, look at it, really internalize what happened in the 70s. We had wild inflation. We had interest rates go up the whole decade. And test yourself, right? There's this talk track today that, hey, rates are going to go up for a minute, then they're going to fall right back down. Well, maybe not, right? There's a lot of things going on in the economy today. And I think it behooves folks to at least appreciate the past, right? It doesn't always repeat, but sometimes it rhymes. So that is something that'll be very interesting. Next up, if you follow my channel, you know that I believe we have a housing crash in transactions. I believe it becomes self-evident on Wednesday when the National Association of Realtors shows that we're down double digits, right? 10, 11, 12%. My question is, will, the powers that be come in with a first-time homebuyer program? Do they do it this year? Do they do it next year? Every time they come in, they disrupt the natural order. So it's something I'm watching for. The big question I have, and I've had for quite a while, it's why I talk about supply destruction. I brought to you supply destruction that has now been termed by others interest rate lock-in. It is all the same thing. When do you sell, right? If you're an owner and you bought in 2020 like we talked about on this channel, and you have an interest rate of 2.8, 2.9, 3, 3.1, 3.2, when, if ever, do you sell? You certainly don't sell soon. Shoot, your mortgage payment is less than rent. So I think this notion that these folks will just immediately sell to reap some cash reward is unlikely, because you got to live somewhere. So again, that's a big question I have. I don't know the answer. I suspect the answer is years down the line, right? I think the average homeowner moves every 7 or 8 years. I think we're going to find in a decade that folks that had sub 3.5 moved even slower. It just makes mathematical sense. But these are questions I have. Next up, as I sit here and I look at interest rates going up, I look at the possibility of a real estate crash in transactions, I have to ask myself, what factor will cause the Fed to pause, pivot, cut? And this is important because there's a lot of money, certainly on Wall Street, betting that the Fed pivot is close, is near. So near as I can tell, there's 5 things that I wrote down. I'd love your feedback, love your thoughts on these, which one you might think is the most likely. 1, if we suffered a dramatic drop in GDP, right? If GDP dropped, again, significant, we're not talking 0.8, 0.1, or something like that. I'm talking 4, 5% negative in one quarter. Would that be enough for the Fed to say, hey, something broke in the economy? I don't know. 2, what if unemployment jumped 2%? Millions more people were unemployed. Would that cause it? I don't know. What if the S&P, the stock market, NASDAQ, Dow, whatever you choose, what if it dropped another 20%? I don't know. What if housing, which is certainly not my base case, but let's ask the question, what if housing nationally fell 10%? I don't know. And then finally, what if Powell is telling us the truth? Go figure. Is it headline or core that he's looking at, or they are looking at? What if inflation got under 4%? Core. What if inflation got under 4%? Headline. I don't know. I don't see either any of these 5 coming soon, but these are the questions that I ask myself, and I think it behooves you to ask, because again, I think the bias on Wall Street that the Fed's closer to a pivot, I would ask you, which of these 5 things is likely? A big drop in GDP, unemployment basically doubling, S&P down 20, housing down 10, or inflation under 4. If you could tell me which one of those things are likely in the near term, we can have a conversation. I don't think any of those 4 things, maybe other than the S&P, if earnings are weak, kind of hit, but I'd love to hear your opinion. Again, I want to talk about retail sales because I want to tie kind of education that we've done on this channel over the last 6 or 9 months. One of the things that we talked about several times is real versus nominal, right? When you see economic statistics, always ask yourself, is this real or nominal? Again, remember, nominal is just the number. Real is inflation adjusted. So when you hear that retail sales surprised to the upside by 1 full percentage point, you should be asking yourself, Michael, is that a nominal number or inflation adjusted? Well, folks, unfortunately, it is a nominal number. So I ask you, just logically speaking, if we just printed a CPI at 9.1%, which includes food and energy, things that you and I buy every day, it was up 9.1, and we got a retail sales up 1%, Do we not think that the real retail sales were negative? Not only were they possibly negative, they were absolutely negative. So again, you got to be very careful with economic statistics, especially in a high inflation environment. Now, I don't know if it's a direct correlation, right? 9.1, 1 minus 9.1, because there's offsets. Not all of 9.1 is retail. But again, it's half. It's 40%. It's 60%. It's something. It's certainly not a positive number. Again, I want to remind you that at 9 a.m., I believe I said this in the video, at 9 a.m. today, there's a 90-minute video with Todd Baldwin and Spencer Cornelia that I seriously hope changes people's lives. I hope there's 20, 50, 100 people that watch this video and their life is changed forever. That is my goal. That is why we have given it away for free. And for all the students that joined and asked all those great questions, thank you. You made that video what it is. So your attendance for that 90 minutes was awesome. So thank you very much. Again, thinking about inflation, thinking about 9.1, there's so much going on. There's things that we have to ask ourselves. Let's just assume for a minute that 9.1 is the peak. Let's just assume 9.1 is the peak. I think that's a big assumption, but hey, we got to put the stake in the ground somewhere. One, we have to remember what we've talked about, this thing called the base effect. The base effect is essentially, remember, CPI is calculated on a rolling 12 months. So when we record the July CPI, the previous June will roll off. And those numbers, if you haven't been looking at CPI, are trending up. So the base effect says when we roll something off, it's a smaller number. But what happens as we start getting into bigger and bigger numbers, the CPI will just naturally be lower. So we are going to get, again, a mathematical phenomenon where CPI appears to be less of a headache because of the base effect. True story, can't argue math. Second, there's a lot of talk about the bullwhip effect. The bullwhip effect is absolutely statistically relevant, although I believe it has some pretty bad assumptions. The bullwhip effect essentially says that, hey, the purchasers, they went out, they ordered 10, they got 3, they ordered 30, they got 9. Guess what? The 21 comes later, and then you have Target and Walmart discounting and all of those things. So that's what's happening now. But the bullwhip effect doesn't appreciate that we frankly have better inventory management today. Yes, without question, Walmart and Target will be discounting. It's why I told you to do Christmas in July. I told you 6 months ago this was coming, and it's here. But what you're seeing now is buyers are canceling orders. That's what you would expect, right? Better cash flow management, better inventory management. Hey, if you used to order 10, then you ordered 30, and now you have 40, you don't order the next 10. So this little window, call it 60 days, call it 90 days, it will be awesome. You will get some amazing deals if you want discounts. In fact, if I was a parent of a child today, without question, I would shop for the next 2 Christmases and 2 birthdays. The discounts are going to be amazing. Might as well go get it, put it in the closet somewhere. Don't forget where you put it though, because that's kind of bad. Number 3, commodities. You will see today with Dan Bird's discussion, I think the video comes out at noon or maybe 1 o'clock, something like that. We talk about commodities a lot. And without question, commodities are down, right? Almost across the board, whether it's soybean, wheat, copper, ore, gas, all these things. That will undoubtedly eventually work its way into the supply, into PPI, and ultimately into CPI. But when? At what scale? Is this a blip? What's going on? Shipping costs. Shipping costs are down, right? They're almost 50% lower than they were 6 months ago. So there's lots of things. So the question about a 9.1 CPI is, given everything we've just gone through, what part of that is transitory? Again, using the favorite Fed word, and which part is sticky. That's important. We undoubtedly have wage inflation, right? We have talked about wages going up. They're going up every month. I think it was 5.1 to 5.3. Wage inflation, very sticky. It is probably the most price inelastic, right? Once it goes up, it doesn't come down, at least come down very quickly. So, we have to ask ourselves, of the 9.1, it's not all transitory. We're not going to go from 9.1 to 4. We're not going to go from 9.1 to 3 overnight. It's just not magically going to happen. Is it a point? Probably. Is it a 1.5? Maybe. So where do we end the year? 6.5, 7? And the reason this is important, because this number tells us how high and how hard the Fed has to go. If you are sitting here today and you think kind of core is 4% and there's 5.1% of transitory or whatever you call it, the Fed doesn't have to go as high. If you think transitory is 2% and it's really 7.1, then they got to go pretty high. These are all questions we have to be asking ourselves, and this is why the economy is such a fascinating thing to watch. The economy is something I've watched for 30 years, and you just never figure it out. There's so many cross currents, so many things going on. It is truly, truly fascinating. So next up, Airbnb. I don't know if you all saw this, but Airbnb is really under attack. And it's not Airbnb specific. It's all short-term rentals. So the first one I saw was Hawaii. Then we saw Atlanta, and I just saw San Diego. There may be others I just missed. San Diego, the city, not the county, the city of San Diego just passed an ordinance where 1% of homes could be listed as short-term rentals. Currently in the market, they estimate that 2% of San Diego homes are short-term rentals. So mathematically saying, there's going to be more rentals, maybe some sales coming in San Diego. Short-term rentals are without question going to be a target by legislatures because it is taking inventory off the market. So again, if you are in the Airbnb or VRBO space, you need to really make sure to understand what is going on in your state, your county, or your city. Don't know if you saw this. I don't think I reported it, but it looks like China's Q2 GDP was negative. I had originally thought it was slightly positive, but I read an article actually validated in a second that the GDP in China was negative 2.6%. We've talked about China quite a bit in that I thought they would be in a recession. I didn't think they would report a negative number, but they did. Back to consumers. Consumers just wiling out. Stimulus ballers, the K-shaped summer. All of these things we've talked about. A viewer, thank you very much. I wish I remembered your first name. I got to do a better job of writing down your first names. But you sent me an article out of the Las Vegas Review. Casinos have set a record the last 3 months. They just did $5 billion in June. $5 billion. The last 5 months has been $24.39 billion, up 20.6%. Folks, why the hell are you gambling? If you think a recession is coming, why the hell are you gambling? We are supposed to stack cash. We are supposed to buy assets at a discount. Why the hell are we out gambling? Talk about not being responsible. But that's what stimulus ballers do. They ball out until they're broke. Next up, I want to talk about Pat, I don't know, one of these YouTube guys, Valuetainment. I forget his first name. I think it's Pat, I think. He talked about something I truly believe and have shared with you. It is easy to play the game in an up market, stocks, NFT, even real estate. However, it is far better to invest and take advantage of bear markets, recessions. And folks, good times never last, bad times never last. We have entered the bad segment. Please do the work. Don't rush. Make every deal better. This is our time. This is the time that one rental at a time students have been looking forward to. So keep doing the work. This is a time to double down, things of that nature. I got some data from another follower. Shout out Hawaii in the house. A real estate agent from Hawaii saw one of my earlier videos and sent me this data. This is for the city of Oahu. Oahu home sales, transactions, down 20% in June. Median price, up 12%. Oahu condos, transactions down 14%. Median price up 16%. Folks, this is what I'm really calling for the country. Transaction crash, median price up. It's a structural anomaly of what is going on. It is going to be very, very interesting. And then finally, I saw a 20-minute interview this morning with Sam Zell on Bloomberg, and they talked about office. If you don't know who Sam Zell is, do yourself a favor, follow or search him on YouTube. He wrote a book called Am I Being Too Subtle, which is awesome. He's just super direct. They highlighted that 11% of office leases come due this year, and there's going to be a lot of pain in office, especially older office. A lot of vacancies, a lot of offices going back to the bank, lots and lots of stuff going on. So, folks, again, remember, probably the most important video I've done for a while. Again, the video that I hope changes someone's lives. 9 a.m. today, in about an hour and 15 minutes, you will see Spencer Cornelia and Todd Baldwin talk about house hacking. Again, remember, we have the sweet treat of getting Dion and Matt to talk next Saturday at 9 a.m. To talk about house hacking units. The one you'll see today is roommates. The one next week is units. So, folks, a lot of good stuff. So, again, have a great day. This is the only video I'm doing today. I'm going to chill out, but we will be back at it tomorrow. Have a wonderful day. And, again, it looks like it's going to be a beautiful Sunday where I'm at. So, remember, do the work. Bye.